Everyone, Paul here. Today I'm going to teach you guys a strategy, and if you guys seen my last video, I had gone over this for crypto, but I want to go over this for stocks, mainly the S&P, but I might look at some other assets. But if you see my last video, this is going to be a little bit different than the last video because basically we're going to be using the ADX for the stock market on the longer time frame. This is not going to be used for intraday or scalping. It's mainly used for looking at on the hour. So you're not going to find this signal. You're not going to find the signal every day. It's based off the hour. But usually that can lead to some pretty bigger results. But anyway, I'm going to show you how to set it up. We're going to go over the 90-95 formula. I'm not going to go too much into it because I've made videos on it, but I really want to go into the other two indicators and how to find your moments. Okay, so the first batch of this, I'm not really going to go too much into this. It's the 90-95 with the linear regression candles. I've made several videos on that, so go and watch those videos. Not going to go too much into it, but basically you can get your 90-95 by getting Ghost Market Pro, which is a paid indicator, or you can go to your indicators and you go to CMEMA trend bars, and you want to click that twice. You put in 90-95. You'll get this. You also need your linear regression candles, which has now been renamed to Humble Lean Regression, so you can find it there. Don't know why they changed it, but you can find it there. And then the next one you need is your ADX. You need your ADX, which you go here to your indicators. You want to go to ADX and go there. And once you have that loaded, you're going to need to do this for whatever asset you're looking at. You want to go to your hour time frame, or if you're looking at whatever time frame you want to trade on, and you're going to have to draw a horizontal line at the 20. So over here at your ADX, draw one at the 20. I got one right here, but you're going to have to do that for every asset you decide to trade, because it's going to go away. So you got to remember to put that line there. And then the next one, the last one here, is going to be your MACD, basically. So you want to load your MACD as well. And the MACD just stays there. So basically, when we want to look at the S&P. And the first thing you want to look at when your ADX, is crossing when it's crossing the 20, basically. So those would be the moments where you enter your trades. So you want to look at when, now it will be in consolidations. You want to keep your eye out for consolidation zones. Other than that, it should work pretty well. So what we could tell right now is we are in a downtrend. So you want to wait for the ADX to cross, which was right here. So if we zoom in real quickly right here. At the moment when the ADX is crossing, this is when you would enter your trade. But you would enter because you would want to base it, and you want to look at your MACD. You want to look at your MACD at the moment when the ADX is crossing. You'll know what direction to go into. And this is an uptrend right here. So from the point the ADX is crossing, now the ADX measures strength in the market. So when it goes up right here, it could go either bullish or bearish. It just measures the strength, basically. So when it's crossing here, you want to look at your MACD and see what your MACD is doing. So you'll get the idea of what direction to go by looking at your MACD. So if your MACD, and I'm just going to get rid, to make it easier, I'm just going to get rid of the horizontal columns here real quick, just so you guys can see it. Get rid of the histogram. Really, we don't really need to look at the histogram. We just need to know, we need to have these matching here. So we see the ADX crossing, and you see your MACD, basically your stochastic crossing. So you know basically to enter the trade right here, and this tells you exactly when to get in and when to get out. So ADX is crossing right now, the good signal of it going up. You can get in right here. You see it crossing up on the linear line as well. So you can ride this out, and this would have made $1,582 in one day. So next thing you got to focus on is when the ADX. Now I'll get to that in a minute, but let's look at the last time it has crossed on the hour with the ADX. Okay, so the last time it crossed was right here. So you would enter your trade, but before you enter, you want to double check a couple things. You want to double check a couple things. You want to look at your MACD. And you want to look, okay, so it's crossed right here. And you know that this one is too late. You are too late for this trade because you see it crossing here. And you missed the cross right here with the MACD. You could have got in there, but this move would have been too late. Because it crosses on the ADX, but you're already halfway there with the MACD. So this would have been a bad trade. But let's just look and see again. Now you only focus when it's going up. So right here you see it crossing. You also see it crossing down with the MACD, so you know to go in for a put right here. So you get in right about here on this candle, and you can ride this one out. And if you look at your MACD, it will tell you, your MACD will tell you most times when to get out, when to get out of your trade. So enter here, exit here, down here, so you would have made $700, $800. So what do you do if if it's crossed with the ADX and you still want to get in a trade? That's what the MACD is for. It's for finding those moments when it has had a big move and you don't know when to actually re-enter. So let me give you a couple examples here. So we want to see the ADX crossing. We can see one right here. So it crosses right here. This is your signal for it going down. And you can look at your MACD. Look at your MACD right here. And you know when to get out of your trade. So all these moments up here, you want to find the next moment. Since right here it went down, you want to find the next moment that it goes down. So basically that's when you look at your MACD, and that moment is, because you won't be able to tell with once it's crossed with the ADX, you won't be able to tell when to actually get in again. So that's where you really use your MACD. And you notice that moment was right here, basically. Right about here is when you would get back in if you look at your MACD. So the first time was when it crossed down here, and then the next time was up here. So those were your moments. So let's just look real quickly at another example, a couple more. So we see, and you can see that the S&P is very volatile. It really depends on the asset you're picking. But right here you see it crossing the ADX, so you would enter you would enter a call right here. And you would also look at your MACD. It will tell you exactly when to get out, which would be right around here. So you would have made $640. So this is a really effective strategy. It really depends on the asset you're picking off the volatility. But my personal opinion is it's pretty volatile with the S&P. You can find some other assets there that won't be as volatile, but you want to use your ADX to know when to enter your trade. And if you look at it with the MACD, and if the MACD is crossing pretty close to when the ADX cross, then it's a pretty good signal. Now, if the trade actually, if the cross happens and it's been in that moment for a while, you can use your MACD to find more moments to get in for scalps. So that's basically what you use the MACD for, is you find more moments to get in for trades. And you also know when to exit your trade by looking at the MACD. When the ADX crosses and then the MACD closes, you'll know exactly when to close the trade. I do not do this on a short time frame. I focus on either looking at it on the hour, the 6 hour, or the day. Anyway, if you guys like this strategy, make sure you hit the like button, hit the subscribe button. I'll see you guys in future videos.